So happy it's Thursday. Hope you're having a great, healthy, happy, prosperous, and freedom loving day in the pursuit of liberty and happiness in life. And more importantly, hope you're doing good things. So, what is yield Bitcoin doing today? And what is it likely to do as the day progresses on this U.S. national holiday? Well, since traditional markets are closed, we're not likely to see a move tied to traditional market open because there won't be. But that doesn't mean that there can't be a move at around that time. The asset has a CDR, central daily range on the VRE, of roughly 0.98%, which is still under the threshold. So it is probably a trending day. And based on what we saw yesterday with the movement up from the time that we did our live stream to the end of the day, when it went back up, it went up to like 97 and change, then came back down to 95 and change. The asset remains in mean reversion on the daily time frame to the 30-12 RMLR. And on the lower time frames, you can see that the central daily range has been tested, and that all in all, it's a very scalpable day, even though the U.S. market is closed. Now, what does that mean if you're a low time frame VEPS trader? And why did I say in the title of this video that Bitcoin is about to devour the feast of day traders, specifically devour the Thanksgiving feast of day traders? Well, the answer is because people who are trading today, you got to remember, most of the people, especially in retail, they're not using leading information. So they're going to get fooled once again by what's happening. And everybody thinks one way or the other it's going to the moon or it's going to zero. Well, the answer lies somewhere in between. And as always, the VRE charts show you great target areas for where to enter and where to exit. And so does the volatility and the entropy. And so does the RMLR and the projection boss and the power mean and variance. And of course, the returns oscillator. Because with the returns oscillator, you know the returns are going up or down, if they're positively correlated or negatively correlated. And that indicates to you whether or not the price action will follow to the upside or the downside. And if you know tendencies, how that works, you'll be very aware of it. And if you know how divergence works, you'll be aware of that too. So, what do I mean by day traders are about to have their Thanksgiving feast devoured by Bitcoin? Well, a lot of day traders simply don't know how to do risk management. More than anything, they just don't have good risk management. They don't have any risk management. They barely even know what that means, if at all. And that's why they'll do silly things like use leverage on an asset that's gone up more than 50% in November, and it's still up more than 40% from the low of November 4th. So if you need leverage on an asset that goes up 40%, in like 3 weeks. I mean, I don't know what to tell you. You have some risk management issues, right? You got to put down the leverage. Just stop using it. It's not doing good for you. It's not helping your trading. Does it mean you can never use it? No. There are times when it's okay to use a little bit of leverage if you actually know what you're doing with it. Most people don't even know what leverage is, right? Leverage is you borrowing money from the exchange. Leverage is a tool that, yes, it can help you dramatically increase your gains, but it can also help you dramatically increase your losses. It depends on what side of the trade you're on. If you're on the winning side of the trade, it'll help you increase your gains. If you're on the losing side of the trade, it will devour your assets. And most people are on the losing side of the trades because most retail traders make a lot of mistakes, including using lagging information, which is not useful and will only help to get you wrecked. They don't have risk management, first and foremost, as I mentioned. They use leverage as if it's candy. It's not candy. They don't take profits early and often. They don't limit their losses, meaning if they're in a losing trade, they don't get out immediately. And they don't trade without being emotionally attached to their trade. And those are the mistakes that traders make that see them ending up wrecked. And that's what you should avoid, because those are avoidable mistakes. Those are very easy ways to not get wrecked if you manage it properly. And they're very easy ways to get wrecked if you don't manage it properly. And that's why you should not be making those mistakes. Well, how can you learn the VEPs, and how can you learn risk management, and how can you learn the 3 basic rules? Well, I've just told you. But you can learn all of it for free, in depth, by going to the Alpha Trading server, the Discord server, which is at alphatradinghq.com/Discord. And there you can open up a ticket in the request support channel and just say you want the volatility starter kit, and you'll get access to the volatility starter package of indicators, which includes a chart that's pre-populated with all the tools you need to learn the basics of trading volatility, probabilities, and statistics. And you have access to all the educational information and to the live chats, and also to using your voice to speak in the live streams that we do Monday through Friday, starting at 9 a.m. Eastern Time, except on holidays like today. Okay, that's going to do it for now. Talk to you guys later. Again, happy Thanksgiving and happy trading. Cheers.